Hi everyone, Gianni DePoce here, and today is the 20th of August 2024, and some very important price action taking place in the indices today. We are finally starting to see a little bit of selling come in across the board in the S&P, the Nasdaq, and the Dow. But I think the bigger thing that we need to be on the lookout for in the coming sessions is for a higher low of significance to form. Basically, we need to see these recent impressive gains, to say the least, digested in some form or fashion. So if we just see the S&P, spend a few days going sideways before eventually continuing higher, or even experiencing a mild corrective decline, I think, with the S&P above 5,300, 5,350, you have to favor the bullish case here. Now, everyone's got their minds on a potential recession, although I'm increasingly in favor of the idea that we already had the recession in 2022. If you look at the magnitude of the decline that we experienced in the NASDAQ in 2022 and compare it with the COVID crash of 2020, it was actually more severe in 2022, not to mention the bear market of 2022 was the longest one in terms of duration, going back to the financial crisis of 2008, 2009. So I know there's been some, political disputes as to what means, what constitutes a recession nowadays. But I think the weight of the evidence does suggest 2022 being a recession, which means we are only just 2 years away from the last one. And I think that points to higher prices for stocks in the near term, especially when you consider that sectors like technology continue to outperform the market. That was the top performing sector in the S&P last week, something you see coming out of lows of significance. So basically, it's new all-time highs or bust for stocks. And we have FOMC minutes to contend with this week, plus Fed Chair Powell's Jackson Hole speech. I don't think we're gonna get a Bernanke moment with some big policy announcement, but seeing some headlines swirl online about how there may be a notable revision downward in job creations and if that may affect the Fed or not. I don't think it's going to all that much, but I am pleased with what I'm seeing under the surface. You're seeing chips sell off a little bit, but if you've been following my bullish biotech thesis, then you're probably not that surprised to see the big rally and the surge to multi-year highs in the biotech index that happened yesterday. IBB almost at a new high, XBI almost at a new high as well. So I think this is going to tie into the AI trade to some extent, perhaps see it spill over into the medical space. We haven't really heard that much about it, even though there's major developments taking place with respect to artificial intelligence and, disease and illness identification on the AI front. Definitely something to keep an eye on. Obviously, there's treatments that can, synthesize and decipher data, to find the right treatment faster. But I think that's going to be a big theme going forward. So something to watch for sure. But, a few of the names that we've been in continue to show some relative strength. Nurix Therapeutics had a big update, had this one for a couple months now. Mirum Pharmaceuticals continues to be strong despite the sell-off. Myriad Genetics, Neurocrine Biosciences, these are all ones that I'm in or watching very closely. And so there's a long list of names that we've been tracking in this space, and they've already started to move out of their bases. And I don't think we are close to the end of that theme in the biotech space. I do want to jump over to precious metals because I do maintain that the strongest bull trend that we see in markets across all asset classes is in gold. And I'm not going to lie, of course, there's always going to be gold bugs out there, but they don't seem as loud and as cocky as they would otherwise would be. So I'm okay with that being a gold bull myself. Silver had a nice update today. I had a little bit of selling come in after a nice morning rally, but I really like what's happening in the space. I actually parked the truck on this Anglo Gold Ashanti trade. It was a really concentrated position for me in my portfolio that we started accumulating end of February, early March. Reduced this to a pretty, I should say normal size, but came away with a 66% gain on that initial position. We captured that gain in the $31 area. And I think it's going to continue higher. I do have a nice runner on that stock. AEM, another bullish one. We captured gains in Alamos Gold. WPM continues to be strong. So these are all names that we've been in for quite some time. But the biggest thing is that you're seeing, GDX make a new high. Silver miners actually outperforming on a percentage basis this is a classical risk on environment for precious metals, and it should be respected as such. Go ahead and take a look at cryptocurrencies real quick. You are seeing Bitcoin and Ethereum continue to chop around. Need to be careful here because I think there's some cyclical tailwinds in store for Bitcoin and Ethereum. However, from a technical standpoint, you could make the argument that we are consolidating the losses. So a few of our crypto plays hanging on by a thread, but I still like what's happening overall in the space, because my whole thinking is that with the weakness that we're seeing in the dollar compared to the Japanese yen, and the dollar against the euro, really seeing a big bid in the euro here, that's probably a tailwind not just for stocks, but for crypto and precious metals as well. And if you tie that into what's happening in bonds, rates are coming down. Once upon a time, there was a crypto carry trade as well. And so between lower rates and a lower dollar, from a macro standpoint, that does suggest higher prices in crypto. I just don't know if we perhaps get one more washout lower. That remains to be seen. But I still think there is a good risk reward set up on the long side for from here in the crypto space. Speaking of the dollar, obviously we have to keep our eyes on the Japanese yen. The Japanese yen making another comeback across many major currencies in the last few sessions here. And, many have attributed the recent bout of volatility that we saw to the blow up of the carry trade in the Japanese yen. And, my whole thing is that I've seen various estimates, 50 to 75% of the trade unwound. Okay, great. Maybe that's why we're not seeing volatility translated over into stocks yet, but that remains to be seen, because if we take out that low from August 5th in the dollar against the yen, need to be alert for volatility returning into the stock market. But, with interest rates coming down again, I think it's going to be a tailwind for housing. There's a lot of bearish sentiment in that space. But, you look at names like Rocket Companies, a position that I've had for a few weeks now. I have a target at 20 to capture initial gain. So we're really close. Hope we get it. No guarantees, of course. But I like what's happening there. United Wholesale Mortgage, another home lender doing well. And you just look at financials overall, JP Morgan near all-time highs, Goldman Sachs. This doesn't seem like an environment where we're about to start a recession with financials at multi-year highs. Another one I've had in the books is ICE, more along the investment lines and data providers, but slow and steady wins the race. And this one's definitely been in a slow and steady bull trend higher. So that's everything that I wanted to discuss with you today. One final announcement: we are going to have our TheoTrade live event in Scottsdale, Arizona, from the 12th of September to the 14th. You don't want to miss it. It's actually going to be my first TheoTrade live event, so I'm looking forward to meeting you. It's a great place to share ideas, do some due diligence, and have some good times with friends and colleagues. So I hope to see you there. Don't miss it. Details can be found at www.theotrade.com. And that's all for now, everyone. See you next week. Thank you.